We are back with another head-to-head, and this time we're taking a look at requested combination. One of two big EV players, and these are Tesla and Lucid. So we're going to break down the numbers, see which stock is a better buy, which one has better growth potential, and where the two sit. So we're going to start with the revenues. These are revenue per share. Just about everything is on a per share basis so that we can get a equal baseline for the two of them, apples to apples comparison, because if a stock has significantly more shares and not significantly more revenue, this will show that. And if we're buying them as shareholders, we really only care about the per share basis, like what our personal position and investment is fetching us. So we start with revenues. As we can see, Tesla is crushing it and they're growing. You can't even see any growth across Lucid's really until the future projections. So definitely Tesla win, and Tesla is the better growth stock here for revenue. We'll see in the future what that holds, because I mean Lucid is projected to double over the next year in revenue at the same time that Tesla's only up about 30% in revenue. So it it could have more growth in the future. Cost of goods, Lucid is definitely winning. We want a lower cost of goods. Having such a low revenue, you hope that they at least have a lower cost of goods. Otherwise, they'd have some terrible margins. So they're winning there, and they're holding them pretty low. Clearly, Teslas are growing, but as were their revenues. That chart looks very similar, as it should if they're holding their margins steady. Gross profit, this one is showing a pretty big divergence. Tesla's higher, it's gaining at the same time that Lucid is actually losing on their gross profit. So their revenue is growing, but they're spending way more money. Gross profit percentage, Tesla wins across the board here. They're holding it steady at around the 20% mark. I mean, it looks way flatter because of how low Lucid goes. They had a massive red year in 2021, huge negative margins. Expenses as a portion of revenue, we would hope that Lucid would have lower expenses, but there are times where they're actually higher. And actually, it's been 3 of the 5 years that we're looking at. So that is definitely not a good sign for Lucid. And then you can't even see Tesla over here on the percentage because it is so low. Their margins are improving gradually. They started out basically break even, and now they're getting 10 to 17% margins at the same time that Lucid is all over the place. They have not found any stability, and they are losing a lot of money. All of these are expenses as a portion of revenue. So even at the lowest year, they were spending 5 times what they were bringing in revenue. And then we have the net profit. Again, it looks like Tesla's just flat at zero when actually they were negative in 2019 and they've been just growing since then. Up to a peak of 362 in 2022, back down to 164, right about where they were in 2021 is the projection for this year. Assuming that they hold their margins, they could improve. They have before. And Lucid is again showing no consistency. Tesla wins across the board here on earnings per share. Tesla wins and they're growing faster. Well, I guess Lucid is growing faster. Tesla is much more consistent. And earnings yield, we again have Tesla winning, Lucid starting out with a really low year in 2019. And I mean, that's kind of cheating to hop up like that, but we'll still give it to them because at the end of the day, we're looking at Tesla on current value winning 8 of the 10 and for growth winning 6 of the 10. So for both growth and for current value, Tesla's winning. And this is what I found really surprising when I was digging into the numbers. Tesla is actually a decent value stock, which kind of sounds crazy. It was a big hyped growth stock, but when I was looking at things, I was like, okay, 2023 and 2024 projections, we're looking at a share price of $257 when I pulled the numbers, and a fair value mostly correlated with earnings. I will give it that, is heavily correlated with the earnings. But I can see reasonably being 276 for a fair value, which means 235 would be a decent buy-in with a margin of safety. So it's in the zone where I would be interested in looking at the stock. And in the future, I mean, we see $100 jump in here. The earnings are supposed to be significantly higher, but we see a $6 move here, which is pretty big for starting at 37. Almost $20 move in the balance sheet, and dividend non-existent. So we're seeing good growth across the board at Tesla. So it definitely has piqued my attention. Share count, Tesla has way more shares than Lucid, so we're gonna give it to Lucid since buying shares gets you a larger ownership in the company. But Tesla is growing their share count much more slowly. Now they're both growing their share counts. Anyone who watches the other videos on this channel knows that I don't like that. That's diluting your position. Like all of these numbers here are based on a per share basis. So they'd be lower considering all else equal if they issued more shares. Shareholders equity, 13 for Tesla, 3 for Lucid. So clearly Tesla is winning, crushing it there, and have a much better growth rate. Now Lucid, I can't get some of the 2019 numbers because they weren't public and my source just does not have them. They just come across as blank. So I do know that they had a negative shareholders equity, which definitely would mess up things even if I were able to pull it from 2022. Yeah, 2020, they were negative 1.3. They've moved to 3.9 and then 4.3. So they have some decent movement, but it's not consistent enough for it to count anyway. So I'm definitely going to give that one to Tesla. Free cash flow, Tesla's positive. Definitely wins there. They're at 98.3% growth compared to Lucid's 113. But the thing with Lucid's 113 is it's negative and it's growing even more negative. And so that's where negative to negative. So Tesla's winning out there as well. Free cash flow yield, of course, Tesla's winning 9%. It's actually a pretty good yield too for a value stock. And they're growing at 33% year over year, which is great growth. So Tesla is definitely piquing my interest after looking at this. Assets, 24 compared to 5. Lucid is growing theirs much quicker. Liabilities, 10 compared to 2. We want lower liabilities, but Tesla's only growing theirs at 11.6%. Lucid's growing theirs at 293. And you see over here, 137 assets, 293 liabilities, compared to 33 assets, 11 liabilities. Tesla is definitely doing a whole lot better on the balance sheet growth. And that's what's bringing that extra value in. So for book value, we have 13 compared to 3. Tesla's better on it. It was negative for Lucid, even in 2020 when we do have numbers. So Tesla definitely wins out there. Debt to equity, basically dead even. Both 0.82. Kind of surprising. I thought they'd have higher debt. So definitely makes me even more interested because I've seen a lot of companies recently that they're getting debt to equity numbers creeping into the 2s and 3s, and we want that under 1 because when that's under 1, then we can have a better trust in this ROE down here. Cash per share, 487 compared to 103. Tesla wins. Tesla has better growth at 24.1. Lucid's burning through cash. They are spending money like crazy. So definitely Tesla here. Share price, I mean, a lower share price is better. This comparison really doesn't mean a whole lot, but Tesla's actually growing year over year, and Lucid has been shrinking. ROE, 28.1. We want at least a 20, ideally somewhere 30 to 50. Tesla's just about there. It has shrank more recently. It could be the balance sheet growing faster than the net income is growing. And Lucid is shrinking and negative. PE ratio, the fact that it's positive for Tesla, 30.77, pretty high. But then again, when we do look at the revenue growth, I mean, we're looking at 49% 3-year CAGR, 60% 2-year. So, I mean, it looks like the market's assuming a bit of a slowdown. No surprise. 30 would not be a bad PE for that kind of growth. And then Lucid, they've got negative earnings. They've struggled to be profitable. They've blown through so much money, spent a whole lot. So clearly the winner here on both the value and the growth front is going to be Tesla, because they're actually consistent with their operations and improving them, while Lucid is definitely still experimenting with things. And honestly, Tesla would not be an awful pickup at today's prices if you agree with analysts on the growth projections. Does that mean that Lucid is a bad investment? To a value investor, yes. To a growth investor, potentially not. I mean, you could look at it as they're spending a lot of money to find what works, and yeah, things are going to be rough for a little bit until they become profitable, and then they'll be like Tesla and just grow exponentially. But that's a huge risk. So it depends on your risk tolerance, as always. And that's what we're looking at for these stocks. So I'm glad that this one was requested and that I got a chance to take a look at them. I've been meaning to look at Tesla. It's been a while, and I am liking what I'm seeing. But I want to thank you guys for watching. Please like if you enjoyed the video. Comment if there is another matchup that you want to see. Two big companies in the same sector industry. We'll see which one's a better buy in case you want some exposure to the industry and you don't know which one. And subscribe so you can stay up to date with everything. And I'll catch you next time.